Over the Road magazine article, August 2009. Operators and their accountants. One of the benefits of writing a tax book to truck drivers is the response I get from people coast to coast. Over the past 24 plus months, I have had wonderful discussions with accountants and drivers from virtually all across Canada. I've learned a lot, such as each region seems to have their own isolated little skirmishes with Canada Revenue Agency. I also know that accountants are busy adjusting to new regulations, thanks to Enron, etc., as well as preparing for IFRS, International Financial Reporting Standards, which are due January 1st, 2011. It is a very unsettling time for many accounting firms who thrive on consistency. Unfortunately, having accountants as busy as they are leaves too many drivers alone when dealing with the qualifications and application of meal allowance, per diem subsistence allowance. I wrote my strongest article last month warning of the industry's potential future conflict with CRA. Too many operators still don't understand properly. A little while ago I had an individual tell me of a friend who was squawking on the CB about the benefits of incorporating. His friend usually paid between $20,000 and $25,000 in taxes every year, but last year he incorporated and only paid $4,000. The implication was that incorporation saved him $16,000 to $21,000. Let me say up front, there is something very wrong with these numbers. The Treasury Board of Canada lists Canada Meal Allowances as $83.25 effective April 1st, 2009. Using an exchange rate of 125%, which is way above the annual average of 106% for 2008, the only puts his U.S. daily travel allowance at $105. If incorporating saved him $16,000 to $21,000, it would represent a tax deduction of $131.51 to $172.60 per day, providing he drove 365 days in the year. If he drove the average 22 days per month, it represents a tax deduction of $181 to $238 per day. Therefore, it is impossible for the numbers to match his understanding. His accountant didn't ensure his client understood his situation. In my experience, the bottom line tax savings for incorporating with per diem subsistence allowance application ranges only from $6,000 to $8,000 per year. His $16,000 to $21,000 drop reflects something else. My guess has to do with when he changed his business status. I assume he incorporated somewhere between May and July of 2008. That means that his self-employed earnings represents only half of 2008's income. The rest of 2008 income is reported in his corporation, assuming no T4s. If this guess is correct, I hope he hasn't spent the $8,000 to $15,000 of taxes yet to be paid. Subsistence per diem does not bring dramatic tax savings if reported correctly. It's only $6,000 to $8,000 annually. In fact, if every lease owner-operator in Canada used this system, it would collectively save $150 to $280 million per year in taxes, assuming all the 25,000 to 35,000 operators are still in existence. However, existence is not what determines qualification. Compliance does. In my humble pie-in-the-sky estimate, only about 40% of all operators will ever truly qualify. Here are just a few reasons. Number one, too many accountants refuse to research the system and train operators accordingly. Number two, without adequate training, qualifying for an operator means surviving a meal allowance audit. When accountants require operators to sign liability waivers, the operator is left holding all the risk and defense, a daunting task to go alone, undocumented, and untrained. Number three, industry disinformation has scared potential users from even considering a change from self-employed status. And number four, too many operators refuse to arrange their financial transactions to satisfy the required employer-employee agreement audit trail. Simply put, many refuse to be trained. They are either arrogant or lazy. The 60% that will not qualify for the tax savings may suffer needlessly, yet suffer they will. The Billy Big Riggers, flying by the seat of their pants from one layover to the next, need to stop being lease owner operators or start being business-minded. Currently, I estimate business-minded operators represent only 40% of the total. Hopefully, in the future, the fly-by-night operators will dwindle to 40 or even 20%. Have a good trip.